Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel. It is September 30th, 2025. We have a warning for gold and silver prices. We're going to look at today what is shaping up in these markets. I want to remind you to please hit the subscribe button and the bell icon to be notified when these videos come out. If you have 1 second to give it a thumbs up, I very much appreciate it. It really does help out the algorithm here. Last but not least, you can see certain weeks I don't have a chance to post on YouTube, but I often post on X. Quicker updates for free at iGlobalGold is the handle. I want to remind you guys, I am an investor just like you. I own physical gold and physical silver. I think that one of the problems with the world is that we have fiat currency. We have these systems with currencies that are unbacked by anything tangible. I think the world would be a much better place if we went back to a hard standard on precious metals to back currencies. That's my underlying fundamental belief. However, I have been through several of these cycles before. I've been investing in precious metals since 2007. So we're getting close to 20 years here, and I've seen several of these cycles already. And I remember from my last cycles in this sector, the familiar voices that are still around today that I was listening to back in 2007, 2008, 2011, you know who I'm talking about, the Peter Schiffs of the world. And if you're listening, Peter, it was nice to meet you at the Vancouver Resource Investment Conference a few years ago. The other types of guys that I'm talking about, and I think they're well-meaning. The late great Jim Sinclair. The investors like Mike Maloney, who understand the fundamentals of the precious metals. Yes, but what I observed when I was first getting to learn this cycle in 2007, 2008, is that those fundamental-based investors were completely blindsided in 2008 and in 2011 when the precious metals topped. And what happened, for example, in 2008 is that silver crashed more than the stock market in the crash of 2008. Silver fell by 60% in 4 months in 2008. Can you imagine that? Like today, it's like silver is trading at 47. Imagine if silver crashed back down to $20 per ounce in the next 4 months. And you have all these people out there saying, silver is just going to keep going higher. Gold's going to keep going higher. I learned my lesson the hard way, which is do not listen only to the fundamental analysts. They know what they're talking about some of the time, but when an X factor comes out of left field, they are not prepared. And here's where I believe studying the charts can really make us prepared for what is coming in these markets. So let us get into it. Our legal disclaimer here first for a moment. And then we go. What I want to do is bring up the chart of the US dollar. Yes, the US dollar. This is the dollar index. It's the dollar compared to the 8 major trade-weighted currencies that the United States trades against. This is the US dollar index, 2007 through the present. And all we want to do is the most basic form of analysis here and establish for ourselves, can we acknowledge this, that for the last 18 years, the dollar is in a rising trend versus what? Other fiat currencies. Clearly, the dollar is losing value versus gold and silver, but here we're comparing it to other fiat currencies. And so what I want to start to do now is show you, going back from my history, like I said, I've been investing in the precious metals since 2007. I remember when gold first hit $1,000 per ounce. It was March of 2008. Can you believe that? We're near 4,000 right now. I remember when gold first hit 1,000. Everyone was talking about it. This was when Bear Stearns was going under. This is when Lehman Brothers was going under. AIG was going under. Wachovia, all the banks, Fannie Mae, Freddie Mac, global financial crisis, all the banks were going under. The Fed came from out of nowhere and said, we're going to print $750 billion to give to the banks to support the banking system. And gold peaked at $1,033 per ounce in March of 2008. Now, what happened after that? Did it keep going higher to 1,500, 2,000, 3,000? Well, eventually, but not immediately. In fact, what happened to gold after it peaked at $1,033 per ounce is it first dropped. It first lost 35% in the global financial crisis. As what? As the US dollar was rising, gold fell. Gold fell by 35%, bottomed at $680 in October of 2008. Gold fell by 35%, and I joke you not, most of the gold and silver mining companies fell by 90%, 90, because they're leveraged to the price of gold. And so, imagine that. You're investing $10,000 into gold miners here. Let's say you think eventually I'm going to be right on gold. You put $10,000 in. 6 months later, that's down to $1,000. Would you really be holding? Do you want to be holding through a correction like that? A 90% drop in the gold miners as gold fell by 35%. Now, into the global financial crisis bottom, then what happened? Gold recovered. It rose by 182% from 2008 to 2011. And notice here that gold topped when? When the US dollar was bottoming. Remember, we're looking at the dollar chart here, and I'm superimposing the tops and the bottoms for gold here on the US dollar chart. So gold topped in 2011 after nearly tripling. I participated in this cycle. I made my first small fortune in this cycle. But then what happened? From 2011 to 2015, gold lost, again, 45% of its value in 5 years. As what? The US dollar was strengthening. Gold lost 45% of its value. People think this is impossible, that it can never happen again. That's exactly what they were saying here when gold was at 1,000 or gold was approaching 2,000. They were saying this is it. Gold's going to 10,000. It can never go down again. Gold lost 45% over the next 5 years. So we can very clearly see here as we fast forward and we look at the next top that gold made at 2,075. And then what? The next bottom that gold made at 1,615. Can you see here that the bottoms for gold tend to coincide with what? Tops in the US dollar. Look at this zone, this gold bottom zone, right? Higher and higher levels, but notice gold loses between 23% and 35 and 45% every time the dollar gets up to this level. And conversely, the top zone for gold is at the lower level for the dollar here, right? The top zone is when you want to be cautious. You want to be saying, hey, should I be selling some of my gold? Should I be selling some of my silver? Should I be selling some of my gold and silver miners? That's the top zone. The bottom zone is when you want to be backing up the truck. Does that make sense? Okay, so where are we today on this dollar index? Gold is almost $4,000, and everyone is saying once again, this is it. This is the time that gold is going to 10,000. This is the time that the dollar is going to go to zero. Are we not at the zone in which gold would actually be forming a top, according to this analysis of the US dollar going back for the last 18 years? Remember, a trend is valid unless proven otherwise. And right now, the dollar looks like it's bottoming right here. And this should coincide with the next significant top in the gold price. Remember what I said at the very beginning. I am a long-term fundamental believer in gold and silver. I think everyone should own some physical gold and silver. And if they would give me a vote, I would say, yes, we should go back to a gold standard, maybe a bimetallic standard, gold and silver, to back currencies. I think we should abolish all fiat currencies. I think we should abolish the central banks and go back to sound currencies. But I am also a realist and I am an investor. And I have lived through enough of these cycles where gold loses 35% in a few months or gold loses nearly half of its value in a few years. I have been through enough of these cycles to learn that nothing moves in a straight line. Not gold, not silver, not the US dollar. And we are approaching an 18-year top zone for gold, coinciding with an 18-year bottom zone for the US dollar. And this is where those fundamental only analysts who got it wrong so many times in the past are going to get it wrong again. And you have to choose who you are going to listen to here. The analysts that just say the same thing every year after year after year, even when gold is going to experience significant corrections, or the analysts that at least make an attempt to analyze the market from a data-based perspective, not an emotional-based perspective. That is your decision right here. You have to make a choice of what you are going to do right now. My best take on this market is the dollar is getting ready to rally here. I think it would be fairly reasonable that the dollar will match this new declining trend that we can see in blue, which would mean about a 10% rally for the dollar, certainly not impossible to imagine. And amidst about a 10% rally in the dollar, I would expect gold to lose about 22% of its value, falling right back down to, let's say, 3,000 or just below 3,000. If you look at this, the percentage loss that I'm talking about here, this would actually be the lowest percentage loss for any of the major cycles that we've seen over the last 20 years. So it's not like I'm talking about something that is outlandish. It's just that most people right now are suffering from a recency bias, in my opinion, which is that they're only looking at the last 2 or 3 years and thinking, well, gold can only go higher. Aha. That's what a lot of those fundamental analysts were saying back at the previous tops for gold. And we are at a top zone for gold right now. Could go a little bit higher still, but we are in the zone for gold to be topping. And you want to be careful that you're not picking up the last few pennies before a steamroller comes running through like it did in past cycles. So that is gold. And by the way, I do suspect that eventually the dollar is going to break down. Eventually it's going to break this, what's going to be basically a 20-year rising trend. But I strongly believe that it is not now, not only based on the dollar chart itself, based on the momentum signals that we're seeing in the precious metals, the near vertical rise that we're seeing in the precious metals. That type of momentum is telling me that it's unsustainable. And that is going to coincide with a bottom in the dollar and a top in precious metals here. I suspect it's going to be in the realm of a 1 to 3 year top for precious metals. That's my early look at it now. And of course, we will be dialing that in as we go along. I never just make a forecast and then step away from the market for 3 years, So that is what we are looking at. And I do think when the dollar finally breaks this 20-year rising channel, that is when we're going to start having the conversations about gold going to 10,000 plus. But at this point, we have to respect the gold top zone that we are in and expect the dollar to be rallying here in a counter trend rally, which should coincide with a normal and healthy correction for gold and precious metals. Now, when we fast forward and look at the silver price chart, I want to remind you that this is silver for the last 20 years. And you think, well, I mean, look where we are right now. I mean, we're getting very close to the all-time high set in 1980 and 2011, close to this $50 mark. We're just $3 away from that now. I want to remind you that I launched this business right here in August of 2015 when silver was about $14 per ounce. If you don't believe me, go back. I have not deleted any videos from this channel. Go back to the videos that I was producing 10 years ago, August and September of 2015. And you will see that I was talking about the bottom setting up for silver. So this is when I was really bullish. Anyone who was following my work back in 2015 or early 2016 has more than tripled their investment in physical silver. Congratulations if that is you. However, now please make note that we are not at a high probability bottom. The bottom was back here 10 years ago. This is when I was very bullish. Hardly anyone wanted to talk about silver back here. Most of the comments, most of the people that were following my work back here in 2015, they were saying, I don't really want silver now. I just think it's going to keep drifting lower for another 5 or 10 years. I don't want to buy silver at $14 or $15 per ounce. That's what most people were saying when I launched iGold. Compare that to today. What are people saying today? We've tripled, more than tripled off the lows, and now everyone wants to buy. Now everyone is saying this can never go lower. It's only going to keep going straight higher. Do you see how the majority tends to get it wrong? The majority tends to be bearish at the bottoms and bullish at the tops. You have to think about being a contrarian here in this market amongst the type of sentiment that even you might see amongst the current precious metals investors, okay? So what I want to do now is zoom in on the last cycle because I was investing back here in 2010, 2011. I told you this is when I made my first real good killing in the precious metals markets. I want to zoom this in and remind you as we look at the 2011 peak, this is back to where silver is now, getting close to $50 per ounce. That 2011 peak, okay, I want to remind you, if you overextended your stay, if you were watching silver climbing higher and higher and higher and higher, getting close to $50 per ounce, and you were like, let me just wait. Let me just keep holding. Maybe this is going to be the moment that silver breaks $50 per ounce. What happened? 1 week later, silver fell from $50 to $33 per ounce in 1 week. 1 week. So you did not have a second opportunity. If you were saying, well, let me just hold just to see, you did not have a second opportunity to sell anywhere near the peak. You lost 1/3 of your value in silver in 1 week. And furthermore, after that, it was pretty much down, down, down for 5 years. Silver lost 72% of its value in 5 years following this peak. Now think about it for a moment. Was the Federal Reserve printing money throughout this 5 years? Yes. Was the dollar losing its value? Yes. Were all fiat currencies losing their value during these 5 years? Yes. Were the unfunded liabilities unsustainable in the United States and around the world? Yes. Were the BRIC countries discussing abandoning the dollar and resorting to a new currency? Yes. All of those things can be true, and silver can lose 72% of its value at the exact same time. Why? Because those fundamentals are not all of the fundamentals. I understand that. I understand that it is impossible for us to know all of the fundamentals. It is impossible for myself. It is impossible for you. It is impossible for Peter Schiff. It is impossible for Mike Maloney. It is impossible for Jim Sinclair. It is impossible for James Paplava. It is impossible for all human beings to know all of the fundamentals. It is impossible for any human being to know all of the fundamentals. It is a mathematical impossibility. The only way that we can make sense of the markets, the only way that we can see all of the fundamentals at the same time is by studying the price of the asset in question. Because every man, woman, and child who is buying or selling, or not buying or not selling, the one place that they come together and they impact the market is the price. By definition, if you're going to buy or sell silver, the only place you can do it is at the current price. So, all fundamentals appear in the price, but any specific fundamental is not all of the fundamentals, even if we believe them to be so. That is why I study the charts first and foremost, and that is why I launched iGold right here after the 70% decline. Not at the peak. I was out of this market for almost 4 years. I launched back here thinking we were probably pretty close to the bottom. I mean, silver's not going to fall 100%. It had already fallen by 70%. This is where I launched it, and I want to go zoom back out now and remind you that was the last peak. Remember, silver lost 33% in 5 trading days after the peak in 2011. It then went on to lose 72% of its value. I studied the charts, and this is where I launched it here. I didn't get the exact bottom. The exact bottom was actually $1 or $2 lower than when I launched. But in the big picture of things, I was certainly a lot closer to the bottom than what? The top, or a top. No one was interested back here. It seems to me that everyone is interested now. And we simply have to ask ourselves, is this not a reflection of the state of the precious metals in which caution is warranted? Now, what do I mean by caution being warranted? Well, this is where it's going to be situation dependent, okay? Except for unique situations. For example, there is a big difference if you are approaching retirement or you have all of your investments in precious metals, right? If you're 100% in precious metals, that is a situation in which caution is warranted here, because if the market's correct and if silver would decline by 70% again over the next 5 years and you're 100% in precious metals, you are going to suffer what could be an irreparable loss, especially if you're nearing retirement or nearing the end of your working years, et cetera, et cetera. If you're 22 or 24 and you have a few $1,000s that you're investing, maybe caution is not as warranted, right? You have 40 more years to repair, even if you lose 20, 30, 50% over the next year. If you are all in on the gold and silver miners, if that represents more than 50% of your net worth, you have to know how much these things can decline in a bear market, and you need to take some defensive actions. So, the state of the metals is that caution is warranted. What are those unique situations? Well, one of them, there is a gold miner that I personally bought more shares in today. I am aggressively buying one specific gold miner because I speak to the management frequently. We talk about the operations, and I have a strong sense of what is coming over the next year for this one particular gold miner. And it doesn't matter if the price of gold falls by 25% or the price of silver falls. They are on to such a big discovery here that if they continue to blow this thing open, this thing is going to go 10 times higher over the coming years, even if gold itself falls. That's my prediction. So that's one of those special situations. If you would like to learn which gold miner I'm talking about, you can do so in our service called Precious Metals Intelligence Plus. You receive not only the name and the research behind that one gold miner, but all of the gold and silver miners that we are either buying or selling. We have sold quite a few, but I am not selling this one. I'm still buying this one. We also discuss the defensive strategies that we are taking here to protect against any decline in the precious metals. You get members-only videos, just like you're seeing right now, but much more in depth. You've only seen about 10% of what we're covering every week. And we strengthen the case that I have just made, and we talk about the twists and the turns that the markets are going to make over the coming year. If you would like to sit down and discuss your unique situation, you can book a consultation on our website with myself. We sit down 30 or 60 minutes. I listen to you. You tell me about your situation. Where are you? Are you 100% in the precious metals? Are you 50% in the precious metals? Are you just starting and you want to try to hit a home run with us? I listen to you and I tell you exactly what I would do if I was in your situation. Remember, I don't sell the precious metals. So everyone has a bias to some extent. We're all human beings. But I at least try to approach this from as unbiased of a perspective, the perspective of an individual investor, not the perspective of someone that is selling precious metals and just wants you to buy all the time. So you can reach me on the consultations tab. Think about what we have discussed today. Think about all those analysts who are only saying one thing. They're only saying that gold and silver can keep going higher forever. Remember, I believe in gold and silver over the long run, but over the short and the intermediate run, you can get clobbered if you do not pay attention to the cycles.